Yo, what's up, guys? It's your boy Looney. So the market just crashed and there's red across the board. There's fear that is spiking, and everyone is asking the same question: what just happened? Today, I'll break down why the market tanked, what I'm personally doing right now, and how you can actually use this drop to your advantage without panic selling or going all in. But before we get into it, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month that gives you access to one-on-one coaching, trade callouts, my full option selling course, giveaways, and more. All the links are in the description. All right, let's talk about what actually caused this sell-off. My account is down 5%, and I'm sure a lot of other people are also down pretty massive. And today's big drop, market drop, was actually triggered by new tariff threats from Trump. And he basically said he's planning massive tariffs on China after canceling a meeting with Xi Jinping, the leader of China. And that one headline wiped out hundreds of billions in market cap instantly. If we look at SPY, it actually fell at around 2.5%. And then QQQ, if we look at that as well, let's see how much that dropped. Also dropping pretty massive at the 3% or now 3.5%. And pretty much right across the board, we saw crypto have massive drops as well. And this one's actually down 6%, or my portfolio is down 6%. And also with that, we have the big tech names that dropped with it, like NVIDIA, Apple, Tesla. All those are all dropping, which are affected by the global trade and supply chains. There are some stocks that aren't really affected by tariffs, and they really shouldn't really go down, but they still do. Something like Robinhood, for example, doesn't necessarily get affected by the tariffs. It does get affected by the market environment, but overall tariffs don't necessarily directly affect the company. So it's pretty interesting that every sort of stock and different thing has been hit with crypto stocks and crypto related stocks, and basically just everything is overall red. And now there's a lot of uncertainty. We're seeing the government shut down as well. And there's a lot of things going on. And volatility as well spiked. So with volatility, it usually is opportunity. This is kind of where you want to take advantage of volatility spike or the VIX, and you want to start deploying capital. And I'll actually talk about what not to do first before you think that you should go all in or sort of panic sell. And that's exactly what I'd say not to do. So before I tell you what I'm doing, first of all, don't panic sell. Yes, this is a drop. If you sell in this fear, because we're technically in a fear environment, but you're actually locking in losses at the worst time. Or maybe you're missing out on a lot of gains. You can take some profits off the table. That's perfectly fine. But I'm not selling everything. This is not the time to sell off all these different investments when fear is pretty high. So that's just what I'm doing. Yes, you can take some profits off the table. I would just say don't sell everything. Don't panic sell because this is a time where you want to buy the fear. Because most people who sell in panic actually end up buying back higher when the market rebounds. And actually, I want to talk about the second part, and that is don't go all in. So I said not to sell, but I also want to say this is not the time to be going all in. And it might be the time to be going all in, but I'm personally not. Everything looks like it's on sale right now, but the market has been running for months now. My account year to date is still up 24%. So there's still a lot of room to the downward direction. I would say maybe even another 5 to 10% drop still possible. So trying to time the bottom is a dangerous game. Yes, you can buy right now. Might be a good time to buy, to invest, but I'm personally not going all in. I still have cash on the sidelines. I have margin, so it says 51,000, but it's around 13,000. And yes, holding cash, this is why holding cash is very important for opportunities like this. You can actually afford some sort of volatility or drop, and you could deploy some capital, but not going all in. So the move that you should be doing, or what I'm actually doing, is to stay calm and make small strategic adjustments and let the volatility work for you, not against you. So what am I doing right now in this market? Because yes, this is scary. My portfolio is down 5%, but I'm not too concerned. Yes, I am aware that it can go down even further, but I'm simply dollar cost averaging. This is something I promote all the time on my channel. I'm simply just adding small amounts into my favorite names, and even things like crypto. Crypto is very skeptical, very volatile, but I'm simply just buying it to accumulate more. And you can see here, I'm not really concerned day to day with where these stocks or crypto goes. Ethereum, for example, is down 7%, and I'm simply just buying it. I'm not even sure if it went through. I think it goes through around 5 to 7 p.m., so I'd be pretty curious to see where it buys it at or what the limit buy is. But yes, dollar cost averaging, this is where it sort of works because you're not really emotion. This is not emotional trading. You just simply have it running automatically. If it goes lower, I'll just simply buy more. If we do rebound, I will buy more, but of course, I will catch that upside. But as for stocks, I haven't really added too much. The only thing is I added open. I like open under that $8 range because my average cost is the high eights. So I'm trying to get it below 8, or at least my average cost below 8. And the only way to do that is to buy at these levels. So I'm trying to be strategic with that, where I'm trying to get my average cost down and do it that way rather than trying to time the bottom and just overall have these unrealistic goals. But I made small purchases on open, and I believe that was the only stock I bought. I was thinking of buying HIMS, but I stopped from it. If we go lower, perhaps I'll buy more HIMS, but right now I just didn't want to do it. Not really any particular reason, just didn't. And then Robinhood, I always have a automatic buy setup. So this one I'm buying $2, and I bought $2 today. So not making massive buys. You can see here, I'm not making massive buys, but I am still being invested in the market because that's really what you want to be. You want to be invested in the market at all times. Yes, you want to be less when market is at all-time highs and things are euphoric, and you want to start buying when things are fearful. But overall, you want to kind of just be in the market at all times. And figuring that out, how heavy you want to be in, is important. And that's why I use VIX. VIX is a pretty good indication of how heavy you want to be in the market, and it did a massive spike. 21 is slightly high. We can see this go even higher to 30, and that's where you want to start deploying a lot more capital, or at least that's what I plan to do. Now, another thing that I did today is I sold cash secured puts because when fear spikes, premiums shoot up. So I'm using that to my advantage, and I'm actually selling puts on stocks that I think I want to own at a lower price. So I have one on Webull, I have one on the leverage trade of Tesla, I have one on Zeta, and I actually opened up another one on Webull today, and another stock called ABTC, or that's the ticker, and it's American Bitcoin Corp. And yeah, it's another crypto miner, and it is founded by Eric Trump. So I like that. That was the reason I kind of did it. I believe that they're pretty involved with the government. So if we do see a deal, this is probably one of those companies that it is possible to see some massive deal with. But other than that, I didn't make any more trades other than those two. I was thinking about doing another Tesla trade, but I didn't really feel confident in when I was doing it. If it goes lower, perhaps I'll do another one, but I'm just simply holding my positions, not making massive buys, not really selling a lot right now. I'm just kind of standing still, letting things play out. You can't time these things perfect, but you can react to these different environments. But that's the last part I want to talk about is cash. Really, cash is important to have. I am aware that it is a depreciating asset, and just overall holding cash is not going to grow. It's not going to grow your portfolio, but not being fully invested can be smart. And that's what I'm doing. I'm very intentional with it. I'm having cash on the side, and it lets me buy for these sort of opportunities. Yes, timing isn't everything, but giving me that sort of relief that I could actually withstand this downfall is beneficial to my emotional investing and just overall my long-term investment strategy. But I'm not deploying cash when there's euphoric. I'm doing it when the fear spikes. And just looking at the bigger picture, again, I'm still up 44%, and I'm sure most of you are pretty up significant, as long as you didn't buy the exact top or you didn't go all in at the exact top. So these kind of days do test your mindset, and they test your mindset more than usual and your strategy. You'll see headlines about the crash, panic, the bubble bursting, but you need to zoom out. We've had dozens of pullbacks like this before. And every single time, long-term investors who stayed disciplined ended up ahead. It's the people who react emotionally that get wiped out. So my game plan is very simple. It is keep DCAing small, sell puts on red days, don't panic, and don't chase. Because this volatility will pass. It always does. And when it does, I'll be glad that I stayed in the game. So just to sum everything up, is this crash was triggered by tariff fears and geopolitical tension. It is rough, but it's not the end of the world. I wouldn't panic sell. I wouldn't go all in. Do the dollar cost averaging, sell puts, and keep cash for even more opportunity. Because the market always rewards patience, not panic. Until next time, peace.